we're going to talk about asset statements. An asset statement can include a checking account, a savings account, a money market account, stocks, or a retirement account such as a 401k. In today's market, you will either need 1 or 2 months of an asset statement. You can get away with 1 month if that asset statement shows a beginning balance and an ending balance. Keep in mind that you have to provide all pages to that asset account. So for example, if you have a checking account and it says page 1 of 5, you need to provide all 5 pages, no questions asked. One thing the bank is looking for are deposits. They want to make sure the funds you are using to qualify for this loan to close on a house are your funds. So the rule of thumb is if you have a deposit or a transfer from another bank account on an asset account you're using of more than $1,000, and that also includes $1,000, so $1,000 or more, you have to source that deposit or transfer. So if it's from payroll, for example, you're completely good with that. If it's anything other than payroll, you have to source that deposit. So if you got a reimbursement or someone paid you for something via check or cashier's check or anything like that, you have to provide a copy of that check and a letter explanation. If you sold something, you just have to have a paper trail, and that can include an ad for something that you sold, your original receipt that you bought it, a bill of sale stating who you sold it to, and an explanation of what that deposit was. If it's anything other than that, such as cash, banks do not like cash. In most cases, they will back it out if you do not have a viable explanation of it, and they will not even use that bank account. Meaning, if all you need is $5,000 and you have $15,000 in that bank account and $2,000 cash deposit, some banks won't even allow you to use that because it's a cash deposit. So you want to be careful that on cash deposits, you most likely are not going to be able to use that, so just don't even go there. The best way to prepare those asset statements is if you know you're going to buy a house in the near future. I always recommend pick an account that you want to be able to use for the purchase of the house, and anything pertaining to the purchase of the house, make sure that you just use that account alone. So what I mean by that is if you have a savings account and you need $10,000 to close and you have $15,000 in that account, if you already have the funds available, just let that account be and just let it sit, so when you're asked for that bank statement or asset statement, you don't have any money going in and you don't have any money going out. It's easy, it's done. There's nothing you have to worry about. If you have transfers, for example, once again, you're going to have to source that other account. So let's just say, for example, you're using that savings account and you have $15,000 in there, but you transferred money from your checking account because you got paid and you put that money in there into that savings of, let's just say it was $2,000. Now you have to source those funds. They're going to want to see that checking account even though you weren't planning on using it. And if you have deposits that can't be sourced, now you have to source them, and you can run into that same issue to where you can't use those bank statements, even if you're not even using that checking account. So if you're planning on using that savings, but you have deposits that you can't source in that checking, and you transfer money from that checking into savings, you're going to have issues with that. So, like I said before, the easiest thing to do is just leave that account alone, let that money sit, so you have an asset statement stating the beginning balance and the ending balance without any funds coming or going. Also keep in mind when you are, if you're purchasing a house, for example, and you're only going to use that savings account, then make sure that you use your deposit that you put down from that savings account. A lot of people use that checking account. Well, guess what? Now we have to source that down payment, or excuse me, not down payment, we have to source that earnest money check, And if you have deposits in that checking account, we can't use that earnest money to apply towards the down payment of that house. That also applies for any other funds that you'd be using for the purchase of that house. Some other things you want to be aware of with asset statements is, if you have non-sufficient funds. Generally, you're okay with, if there's just one, possibly two. The bank's not going to have an issue with that unless you have a history of it or multiple non-sufficient funds in that account. If that's the case, a lot of times they just don't like to lend to that particular borrower just because they have a history of not having enough money to pay bills and go negative in their bank account. Another thing you want to be aware of is if you are using an asset account such as a 401k or retirement account or stocks, they won't use a full 100% of it. It's either 70 to 60% is what they'll use. So if you need all those funds, you just basically want to create that paper trail of withdrawing that money and transferring it to a bank account, such as a checking or savings. Then they will use all of that money. So, once again, if it's checking or savings, they'll use 100% of it. If the deposits and the funds are good to go. If you're trying to use money from a 401k or retirement account or stocks, you want to move that money and have a paper trail leaving that account into a checking or savings so you can use 100% of it. Another thing you want to be careful of and prepare for is if you have an asset account that has your name on it along with either a spouse or someone else on it. What you want to do is, if that person will not be on that loan, you have to have authorization from them that you have full access to those funds. So let's just say it's your spouse and that spouse will not be on the loan. Even though you're married, your spouse will have to write a letter explanation stating that you as the borrower have full access to those funds for the purchase of XYZ property. That also applies if you have any other family member on that account or a business partner, just anyone else. So just keep that in mind. So once again, one of the biggest issues that people have with closing on a loan is the asset statement, and that just comes down to they have deposits that can't be sourced. They have a lot of money moving around, and you have to be able to track where all that money is coming from. So if you want to make it simple, like I discussed earlier, if you know you're going to buy, just pick an account, let that money sit in there, and that way when you have to use it, it's ready to go. If you do have to deposit money in that account or transfer from another account, make sure you aren't depositing cash or depositing any checks or funds that can't be sourced. If you have any questions, feel free to reach out to me, and I can go over if you have deposits that you're unsure of, just to make sure you're good to go if you're going to be buying a house anytime soon, or even refinancing if you're going to need those asset statements. So once again, if you have any questions, feel free to reach out to me and contact me. I'd love to help.